All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Same old chop in the market, right? A little bit of higher open this morning. Then we get a chop on down here on the ISM data, and we'll go out and take a closer look at that ISM data. But before we do, we'll take a look at the challenge, and then this afternoon. When I jump on video, it'll be a little bit of a longer video this afternoon. We'll do the normal challenge stuff. But we'll also go out and talk about option selection for the challenge. And we'll talk about missing trades, meaning, hey, you know what, I was out or something, I missed this trade, what should I do? Should I get in? Should I leave it alone? And go through that process and those questions that oftentimes come in. And, I'll kind of show you with the challenge how you can make really good decisions, around that. And so we'll do that in the afternoon video session. So it will be a little bit longer, but we'll do the normal, trade stuff right at the beginning there of it. Okay. All right. So let's get to the challenge here. We have two positions on the board. We have Home Depot and we have Intel, and they're just chopping along, not really going anywhere. But Intel 184 and 695 for Home Depot. So 695 and 184, not exactly burning it up here, or screaming, some scorching trend or anything like that. We do have Home Depot, trading about $1.50 above its, above our entry where we got in, which is not even half of an average true range. So really haven't seen much movement in it since our entry. And then Intel, same thing. We just got in yesterday. So, both holding up okay this morning off their highs. Neither are near their auto exits, with both being slightly in the green. The auto exit dates or the green dates, October 4th, October 8th. If Home Depot were to reverse, strongly today, and were to be down about $2 or something, the auto exit date would come into play for the red position. So that could come into play here this afternoon. Hopefully not, but it could. Now, no new triggers on the board here for the challenge this morning. Let me show you the quick scans here of the crossovers. So upside crossovers. Here we have Target and we have U.S. Steel. I'll show you what those look like here. Here's U.S. Steel, which has a big, big candle on it here today. News driven there for Target, or for U.S. Steel. And then we have Target with a, small little 3-7 crossover here to the upside. This stock since the earnings has really been mired in a consolidation, a pretty heavy consolidation here. And the consolidation risk on it right now is very high. So neither are challenge triggers, but both have 3-7 crossovers. On the bearish side, we have Boeing with a downside 3-7 crossover here. And again, this is one that had the nice 2 days here in September, and then has really just gone nowhere since. The chart is very reminiscent of of a stock we played a few times last challenge, and that is with Bank of America, right? And last challenge with Bank of America, we were able to grab it right here after this kind of choppy consolidation, and we caught the 2 days, we got time stopped out, took a decent gain. But then more chop, and then we ended up being able to get right back in on this crossover right here. We get 2 days, and then more chop, and get knocked out of the position. And Boeing here, it's doing something similar in terms of just the overall price action. We didn't get a signal right here on this move. The move was a little too dramatic there. But it's had that kind of 2-day move, chop. I would not be surprised to see just a little more pullback, and then an upside 3-7 crossover and a breakout to the upside. But again, we'll see. Obviously, the market will come into play in terms of, the direction of these things. So those are the 3-7 crossovers here this morning. None of them are qualifying as triggers here for the challenge. In fact, all three aren't even close. So So, not expecting them to trigger by this afternoon. We could see some other stuff emerge, and if it does, we'll go out and take a look at it. Again, I can't trade the next signal until there's cash available, and cash won't be available until Home Depot and Intel play themselves out. Okay. All right. Worst ISM since 2008. Well, let's go take a look. ISM number this morning created quite a ripple, quite a reaction here in the market. And let me zoom into the 1 minute. Well, let's start with the 1 hour. Right. On the 1 hour chart, is it really making any kind of material change? Nope. Not at all, right? No, just not at all. It's same range, same chop, same old here for the market. If we look here at the 1 minute chart, you can see the drop, and we haven't had an ISM number reacted to in this fashion in a long time. It has been a while, and you can see the ISM number really dropped the market by 27 points here. We're seeing a small pop back, but I mentioned this morning in my note that we're going to have a lot of economic data, but most likely the market's going to look ahead and not really pay too much attention to it. So much for that, right? The number was that bad. That's how bad the number was. It just, it was a number to, create some fear, and rightfully so. And if we go and we look at the number came in at 47.8. Now, keep in mind, this is a survey, okay? This isn't an actual measure of economic production and capacity. This is a survey. And so one of the things we see with surveys is we will see reactions, overreactions on both sides where, if all the headlines are really good, the upside's going to look a little better. If all the headlines are really bad, the downside's going to look a little worse. But what's interesting about this number is 47.8. It's below 50 and it's contracting, right? But it's the second month of contraction. And, that's concerning. And perhaps more concerning is the new orders factor, right? We saw a big dip in new orders last month, but that has not bounced back. So what does that tell us? That tells us next month's number is probably going to be pretty ugly. Right? This isn't going to be something where we look and go, oh, well, next month all is clear. Now, we could look next month and see a 47 print on the ISM, new orders print at 50, and okay, it causes a little bit of bullishness. But we see production dropping off, employment dropping off, and both contracting, right? Both contracting. We see inventories, falling off. We see customer inventories increasing, which, isn't necessarily a good thing. We see prices rising, which is not a good thing, right? If you want to look and say, well, the tariffs are having an impact, you can look at this ISM prices number and say, yep, they're having an impact. Backlog of orders is shrinking. New export orders is shrinking, and imports jumped a little bit, but still contracting here. So it is a very ugly number, and if we want to look and kind of put it into some historical context, Trading Economics is a pretty good site here. And we can come in and let's go 10 years here, okay? And you can see that, we saw a dip down to these levels in end of 2015, early 2016. And we're seeing a lot of economic data really come down to some of the levels that it visited back then. And, back then it was the bull market's old. It's already been a long bull market. Things got to fall off. And we saw, a pretty good, pullback in the markets, and one that offered some pretty good value. We haven't seen the same pullback in the markets here, with the pullback in the economic data. But we are in that kind of contraction period. But you can see in 2012 we saw contraction. 2016 we saw a contraction print. 2009 we were down in the 30s here for the ISM number. So it's not the worst number since 2008, but it is a bad number. It's a bad number. It is the type of number that is not going to garner any confidence. But if you're bullish, right? If you're bullish, you're going to look at this number. What you're going to say? Well, you're going to say, well, this number is good enough to get the Fed to keep cutting rates. It's good enough to keep the ECB cutting rates because, well, we saw some really ugly PMI data out of the Eurozone last night. And you're going to go, well, this may put a little more pressure on the U.S. and China to make a deal, a legitimate deal. And if those things happen, right, rate cut, China deal, you're going to see the numbers snap on back. Right? And so that's the bullish argument. The bears are going to go, well, you know what? Hey, everyone else is asleep at the wheel. The Fed really doesn't want to cut rates. We're not going to see a trade deal, so economic data is bad, so we're going down. Right? And that's going to be the bearish argument. And, both of those arguments, do have some water. And we have some very intelligent people on both sides of that fence arguing the complete opposite things, right? With the exact same data. And that's what a market is. We'll continue to see how that plays on out. Now, we also saw the factory orders number. Let me pull it up here for you to show that. Let's see. Let's go to 10-year. And it looks like, no, they don't have it in here just yet. But the factory orders number was nothing to write home about either. And let me see if I can pull it up here on an Econo Day. All right, here's the PMI manufacturing. This one showed expansion, but nothing really to get too excited about there with it. And then if we come into construction spending, a little less, followed, a little less watched, a little bit better than last month, and a little worse than the consensus, but nothing too dramatic there with it. So that data created the reaction here, and a pretty sizable reaction here, for the markets. Is it something that I'm gonna, something that I think is absolutely game changing? No, I don't. I don't think this is a game changing type of move here, but it does just kind of solidify or continue to solidify this chop element here. We could be looking at some technical weakness starting to come into play in the markets by the close of the day. But if you look at something like the bullish percent index, we're not getting any kind of pullback, right? You can look at something like the S&P and, okay, you know what? We have a little bit of a downside candle, but you see what the Bollinger Bands are doing, super ultra contraction. And, the candle here is, nothing like what it was. I mean, Friday's candle was bigger. We saw 2 candles last week bigger. Now, there's a lot to play out. It's very, very early, but, we're not seeing the metrics move in a real material way, here on this. So ugly number for sure, just an ugly number all the way around for the ISM manufacturing. And, what we saw with the PMI numbers out of Europe last night, and I mentioned in my note this morning, it was very ironic to see, Greece leading the way and Germany, the big laggard. And, if you followed the Greek debt crisis and traded that in 2010, 11, 12, 13, 14, 15, seemed to come around every summer. But it was always, Greece versus Germany. I know it was Greece and the EU, but Germany really held the cards there. And, the Germans had the better out of the economic data. Greece's data was, just really bad. And now to see that kind of switching is, wow, pretty interesting. Pretty interesting. But that is the world we are living in right now. And I don't expect that to change. I don't expect that we're going to get some sort of magic silver bullet come into the market that's going to all of a sudden take away the issues and, solve everything for the bulls. And I don't expect we're going to get a magic bullet here to go solve everything for the bears either. We could be in for a little bit more of this chop, until we get some sort of material resolution to, to some of the other issues that are out there. Thanks for hopping on. Have yourselves a fantastic day. Again, I'll be back on this afternoon, but we'll be a little bit longer video talking about option pricing for the challenge. and talking about mistrades. So, hey, you missed an entry or something, or the price changes or something. I'll talk about those situations and, different ways to handle those. Again, thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you this afternoon. Take care.